And let's bring in Hao Hong, our China watcher, managing partner and a CIO at the Lotus Asset Management, a friend of our network, joining us live from our Hong Kong set. It's been a while. Yeah. How are you doing? Thanks for joining us.
Great to be here.
So the property sector still struggling, and it's not new, but I thought we were seeing some level of optimism that this cleanse was being done. What happened?
Yeah, there was optimism in the first half of the year. And then I think going to the second half of the year, things start changing for the worse. So actually we're seeing sales decline accelerating. And also investment in the property sector is declining at a faster rate. So I think overall, despite having some hope for recovery for this year in the first half, I think the second half is looking more or less the same, or sometimes even worse than before.
But the market reaction is very different from, say, 2 years ago. Why do you think that is, that the market is just trying to ignore and just focus on the stock market? Because maybe they are trained with the property market mess.
Yeah, I think people are getting used to it. But most importantly, if you look at the Chinese economy these days, there's a dichotomy that is going on, right? So one part is totally unrelated to the property sector, which is the high-end manufacturing, AI, robotic movements and all that. And that part is doing exceedingly well, and is actually taking market share from the rest of the world. I think anything related to the property sector, however, is doing really poorly. But this part, fortunately, is becoming a smaller contributor to the overall economic growth. So I think as a result, people are starting to overlook the weakness in the property sector.
And staying on the property market mess, do you think that it's maybe the market is more comfortable with it, maybe people are getting used to it, as you say, or some level of belief that the policymakers are not going to let it just really implode to the level that it actually affects other parts of the economy or the stock market that is running in a very robust manner?
That's right. Well, I think the property sort of malaise has been ongoing for almost 5 years now, right? So I think we peaked in 2021, and ever since that, if you look at the property price in the tier 1 cities, it's down 30%. In many of the tier 2 cities, it's down 40–50%, sometimes even more. And despite that, there's still new projects being built, right? So for example, Vanke has close to 800 projects that is being built, and the two big guys actually have over 1,000 projects being built, right? So the inventory overhang is very significant. It's very difficult to get rid of. I think late last year, the government actually had come out and say, well, we're going to launch a 300 billion yuan bailout fund, to take out many of the unsold inventories. But you're talking about a sector that is still selling probably 7 trillion to 8 trillion yuan a year, right? So 300 billion is not going to do much. So I think as a result, things just keep dragging on. And I think recently, specifically for Vanke, is because its short-term cash position is dwindling, so it's not nearly enough to cover its short-term liability. And more importantly, I think Shenzhen Metro, which is now the largest holder for Vanke, is asking for collateral for its loan to Vanke. Right, so people are seeing it as a weakness that is developing for this developer.
So how do you see this getting resolved? I mean, the company asking for a delay in coupon payments and so on. The government is not really actively trying to work things out. You say in your note that the only way out is government bailout, but the Chinese government is not really, it's not really in its nature to do that.
Yeah, because the mentality really is that, you don't want to develop moral hazards for these people. So in the past couple of years, because of aggressive expansion, many of the developers, basically engage in some sort of illicit activities, for example, misappropriate people's deposits for new buildings, all right, so use it for other purposes, etc., etc. And now many are being investigated. Recently, for example, Vanke's senior management is being investigated by authority as well. So I think, for bailout, that is still not happening is really because of this moral hazard mentality that could be developed, once you have a bailout. And also, when you want to bail out this sector, just now I mentioned that, right? So we're still selling 8 trillion yuan a year, right? Which is a very humongous amount in an economy that is 120 trillion yuan in GDP. right? So the bailout has to be like 10 trillion in size for it to be effective. Right, so it's a very large sum we're talking about.
So investors will just have to go through this very painful process and
yeah, I think it's a very drawn out, very drawn out process, right? So I think if you look at the Japanese experience, it's been like 20 years since they walk out of the shadow. I think for the way China is handling its property sector, seemingly is going that way.
Do you think the public in China, the general public, the sentiment has changed, looking at how the property market sort of blew up here, that it was all about buying properties, and maybe that's changing and there is really no alternative. Remember TINA in markets, and they're just buying up stocks, and that can explain the rally in equities?
Well, I think, so even though there's a secular downtrend in the sector, right, so you still have technical rebound. And also this year, I think the PBOC has been pumping liquidity into the system. And property used to be, one of the most sensitive sector to interest rate change. And therefore, people are looking for a technical rebound in this sector, but, you're doing a technical rebound on the way down, right? So I think for many asset allocators, the Chinese property technical rebound should be sort of a way to exit, right? So you sell on rebound, right, rather than buy on dips.
Okay. And does that somehow explain the rally to a degree in stock markets as well, that maybe people exit if they can in the property market? They don't put fresh capital into the property, and then they're looking at, well, I mean, they're not going to go for a bond market at this point, right?
A bond has been in the bull market for like 3-4 years.
Exactly.
Right? So it's actually the best performing asset class in China for the past couple of years until this year. So this year, people are reallocating their cash and capital to the other part of the economy. And also, for the property sector investments, you're right. If China continue to sink investments into the property sector, then I actually think that it's a bad news for the economy. In the sense that you're throwing good money after bad, right? So right now, we're actually investing in high-end manufacturing and many other more productive areas to prop up economic growth instead of investing in the property sector that is still ailing and in a secular downtrend.
What's your market call next year?
I think we're going to be doing fine. I think next year, I think the
What's fine?
Fine as in...
What's fine?
Well, let's look at, 20% plus gain in the market. I think this year we did close to 20%. Right? So I think because of the liquidity injection from the PBOC, I think into the next year, we're actually seeing the PBOC continue to expand its balance sheet. And this time around, so for example, a couple of months ago, 1 month ago, the PBOC come out and say, wow, we're going to redo the open market operation in the bond market, right? So, to inject liquidity. And that should be considered as a mini QE for the Chinese economy. But for some reason, the news has been largely overlooked. I think into the next year, such liquidity operation will continue, right? So you're going to see abundance of liquidity in the Chinese market. And therefore, it all goes well for commodity sector, for many of the interest rate sensitive sector, for banks and financials.
It's interesting you say liquidity setup going into the next year, because some parts of the market, I mean, like a crypto, they're talking about the liquidity problems. Right. At the same time, the Fed is actually ending their QT, potentially going for rate cuts later this month, potentially, or next year. And if the PBOC is going for some sort of an expansion of their balance sheet, we're talking about much improved liquidity profile. Then do you think China is set up in a relatively better position than, say, the US, because the valuation is looking much more attractive on this side, right?
Yeah. I think China is cheap, and also in the US has been outperforming for like years and years.
Yeah.
So the Chinese market has been languishing for years until this year, until late last year.
So we're in the early innings?
I would say so. I think, with the liquidity condition going this way, we should see the Chinese market considerably higher from here.
Okay. And how does that sort of seep into the psyche of foreign investors looking at China? Because some foreign investors tried in China and they got burned.
That's right.
Really poor timing and so on.
That's right.
Do you think that psyche is changing now?
I think this year we're seeing start to see some foreign inflows into the Chinese market, but I think even for a seasoned international investors, it's very difficult to participate. So if I want to buy the Chinese story, I have to come to Hong Kong, right? So Hong Kong is doing really exceedingly well this year, and also the Hong Kong IPO is firing all cylinder.
Yeah.
Right? So I think if international investors want to take a second look at China, they can come to Hong Kong, as a proxy for the Chinese stock market.
Apart from the property sector mess, what is the policy pillar in China for the next year?
Yeah, I think,
Is it more of the same, that they're not going to go for bazooka, they're going to try to stimulate, as we sort of got the messaging about 12 months ago? Does that continue?
Yeah, I think we should see more aggressive policy action next year.
Really?
Because it's the first year of the 5-year plan. Normally, the Chinese, the authorities tend to pump up a lot more policies, right? So because you have a 5-year plan ahead, and you really want to do something, right? So so what you want to do is that you throw out all your policies in the first year so that you have 4 years to work on, right? So I think that tends to be the mentality. And so if you look at the history in the Chinese economy, it tends to do well in the first year of the 5-year plan. So I think with the liquidity condition going this way, with the history on our side, we should see the Chinese economy steady as she goes and even outperforming next year.
And with that new capital injection, with that accommodation, what are some of the sectors that would benefit? Is it the usual suspects that you were mentioning, the AI and industrials names in China, or is there any surprise?
Yeah, I think AI is a long-term story. I think, as we're speaking, Chinese AI companies are actually coming up with a large language model, which can rival the Western counterparts, right? So last night, for example, DeepSeek released another LLM. It claimed that it rivals the ChatGPT 5 and Gemini. So I think it's a very long-term story. I think China is a sort of a state-level rivalry with the U.S. in terms of AI development. U.S. is going in a sort of a closed-end development model, but the Chinese model is open source, and so far it's proof that it's working. So I think AI is a long-term story. High-end manufacturing, is a long-term story as well. I think besides that, for next year, because of the liquidity condition is rising, and also we're at the part of the economic cycle that tend to augurs well for precious metal, for non-ferrous metal. Right? So this group of commodities would do exceedingly well in the next couple of months.
Precious metals like gold.
And silver.
And silver.
Yeah, silver.
Do you have a price in mind?
Silver, at the end, I think silver would be like 80 to 100, right? So it's doubling from a couple of months ago. I think gold, because it's done so well in the last couple of years, and also the gold to silver ratio is so high now, so it means that gold is substantially more expensive than silver as a precious metal, and therefore, we should see silver substantially outperforming gold in the coming months.
You were talking about AI and how that is going to be really the long-term narrative for markets, but what is really the big sort of difference that you see in AI narrative playing out in America and China? Because in the US, it's about, what about China? China is doing this, so we need to win, so we need to invest all these money, and we need to come up with all the infrastructure and so on. However, at the back of their mind, it's really about, we still have the AI leadership. China might have the power infrastructure that's a little bit more advantageous than us. What is the AI narrative and US-China competition dialogue happening in China?
Yeah, well, I think, in China, people are very excited, in the sense that, Chinese guys don't have all the GPUs, right? So we're working with GPUs that is like 3 generations behind the US guys, but then at the same time, we have the government support, right? So the Chinese way of development is really that, we're trying to make do with, very, very limited resources, while the US is like throwing money left, right, and center, right? So it's entirely different, So I think the US has the money to spend, and And actually they are probably still ahead, still ahead of China. But I think, in the past year, the distance between the two countries the gap between the two countries has narrowed substantially.
Hao, it's always great to have you on. We should do this more often.
Yes.
Yeah, thank you so much.
Thank you.
And happy holidays.
Yeah.
I can't believe I'm saying this already, but December 2nd
Christmas
already.
is coming.
Yeah, exactly. Yeah. Thank you so much, Hao Hong there from Lotus Asset Management. Meantime, we're going for a quick break here as we tail